Income and growth was designed for those investors that are seeking income that is somewhat higher than fixed income alternatives, but also have the participation in the equity market growth over time, such as high yield convertibles and large cap growth equity, all combined into one very diversified fund. So all investors would be attracted to that. But the fact that the income stream is both somewhat stable as well as higher than fixed income alternatives, those income seekers are definitely going to be attracted to this fund. If you're an older investor and you are looking at an income stream, this is going to diversify you away from your fixed income alternatives that you're invested in currently. But also if you're a younger investor and you have many, many years before retirement, this diversified pool of assets should participate in equity market growth, but also give you some of that downside protection that bond funds would afford. That's exactly right. When we think about one-third, 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 there is no mathematical formula that would drive you to that. What it is a constant reminder that that diversified pool, we are not concerned about what part of the market cycle we are in. There are those that may choose to time different market segments, but if we are wrong and we don't get that answer correct, we might have a lesser ability to produce that distribution for clients. We need to make sure that we're using our skill set to pick superior companies where in the capital structure we want to be, and that's going to give us that distribution yield visibility over time. Well, there are lots of lessons learned from our team. We've been managing high yield convertible bonds for over 20 years, and the same team sits together in San Diego to produce those returns. We've had lots of combinations of these different asset classes in unique closed-end funds historically, where they would mix and match to produce a certain type of return for an investor. What we've determined in creating income and growth, that's 7 sources of income: coupon from converts, coupon from high yield, dividends from stocks, those will all be contributors. But we also have the capital gains generated by all 3 of those same sleeves, offering another 3 opportunities. And yet we also have the opportunity to use options when equity markets are more volatile to create excess gains and excess returns for clients. All of those give us visibility into the stability of the distribution. We had goals for our closed-end funds to combine high yield and convertibles, for example, to have a higher payout. But what we learned over time is if you don't use those total return convertible bonds, those that have some equity sensitivity, we end up underachieving our client goals. We need to make sure that we use balanced convertibles, not look for just maximum coupon return for the longevity of the portfolio. So it might work in a short term, but it doesn't work for the long term. Another one would be leverage. Many investors seek higher returns or higher income from using leverage. That works in some environments. Right now we're in a period of rates that are rising. Therefore, the cost of leverage is going to increase and potentially dampen returns. We don't want to use leverage in this portfolio for that very reason. Also, some of those leverage tools might dry up. There are different market cycles where they're not available, and that will have a negative impact on the portfolio, regardless of the manager's ability to pick superior securities.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。